Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and over the next 1 hour, me and Priyanka Uppal are going to be taking you through news and updates from within the country as well as across the globe. Also tell you which stocks you should then be keeping on your radar. And then speaking of stocks, let's take a look at the handover then coming in from Wall Street, because Thursday's night action, of course, follows a winning but volatile trading session for the three major indexes. So tech has been the major talk of the town when it comes to the Wall Street, given Monday's big sell-off that we saw earlier this week, sparked by developments out of China's DeepSeek artificial intelligence startup, as well as earnings reports coming in from key players over recent days. Now, they will also remain in focus. But speaking of advances, then, despite the advances that you saw coming in, Dow still is on track to finish the week higher. You do have the blue chip index that has risen about 1%, the S&P 500 then and Nasdaq Composite are poised to also finish down by 0.5% and 1.4% respectively. And Friday, of course, also marks the last day of what has been a rocky January coming in for traders. Nevertheless, you do have the three major averages that are on pace for monthly gains. For the S&P 500 up 3.2%. So that's the kind of gain that you're seeing coming in for that index. Let's try and get that plate up on the screen as well. For the S&P 500, 3.2% and the Nasdaq on pace for a 1.9% advance as well. When you take a look at the Dow, then that is the one that outperformed for the period, on track for a 5.5% jump at this point. But it was a rocky January indeed coming in for the Wall Street. In fact, on that note, let's quickly take a look at what oil also did, because oil prices also edged up, settled up 0.4% higher coming in. And what remains in focus are the tariff threats at this point. But speaking of what remains in focus, let's also take a quick look then at the events that you should then be watching out for. And on the back of futures and options inclusions, you do have NBCC, Phoenix, Solar Industries, India, as well as Torrent Power that will remain in focus. And in terms of other cues to watch, then you have inclusion of Indian bonds coming in the Bloomberg Emerging Markets Index, so that will remain in focus. And from India, you do have the economic survey, so keep an eye on that as well. From the US, of course, there's PC inflation data, and that will also remain in focus, like I mentioned earlier. And in terms of earnings, then four counters to keep an eye on in terms of earnings, then Nestle India, ONGC, Sun Pharma, IndusInd Bank, like you can see on your screens as well. And in terms of corporate action, then keep an eye on IGL, because that's the one that's going to be trading ex-bonus in the ratio of 1:1, and it's also the last day to buy shares to be eligible for dividend for Torrent Pharma. So even that one is going to remain in focus, and the lock-in period, of course, it's ending for Swiggy. So keep an eye on that one as well. But on that note, let's kickstart our coverage with news flow then coming in from the United States. GDP growth in the fourth quarter grew at a pace that was slower than expected. In fact, GDP, which is a measure of all goods and services produced, showed an acceleration of 2.3% coming in on a year-on-year basis. Now, estimates were hovering around the 2.5% mark after the 3.1% growth in the third quarter. Then, in fact, the growth print closes out 2024 on a downbeat note for the full year growth that stood at 2.8% versus the 2.9% that was being marked out for 2023. Goes without saying that growth was largely led by brisk spending from consumers, despite lofty prices of everything from homes to cars to eggs, you name it. But moving on then, the European Central Bank has also cut its deposit facility rates by 25 basis points down to 2.75% now. And the rate cut was expected by investors. The main refinancing rate was also cut by the same quantum, then down to 2.9%. In fact, the ECB has still not committed to a rate cut path for the year then, and is waiting for inflation to sustain at the desired 2% level. So that's the latest coming in on that front. In fact, on that note, let's go across and listen in to the word then coming in from ECB President Christine Lagarde.
The economy stagnated in the fourth quarter, according to Eurostat's preliminary flash estimate. It is set to remain weak in the near term. Surveys indicate that manufacturing continues to contract, while services activity is expanding. Consumer confidence is fragile, and households have not yet drawn sufficient encouragement from rising real incomes to significantly increase their spending.
There is no earthly reason, and I think no reason why the ECB would stop at this point, given where inflation is and given where rates are. And I think to map out where they're going to go over the rest of the year, I think will be quite interesting. Now, the Fed's dot plot is 2 rate cuts in 2025. I think that's going to be pretty hard to do at the moment, given the economy, given inflation, given the uncertainty about Trump's tariff and tax cut policies. So I think all of this, and I know that you didn't particularly ask this question, but I think all of this probably is going to put downward pressure on the euro against the dollar, and that's been my call for the year. So I think the ECB will push the thing in that general direction anyway, by almost certainly highlighting there is much scope for more rate cuts still to come in Europe.
All right, then that's the word coming in from Geoff Dennis then. But it's time for a very quick breather on the show. When we come back, we'll get you a check going on what the Asian markets are doing. But as we slip into a very short break, take a look at some of the handover then coming in terms of the earnings fine print from across the globe.
Welcome back. You're watching Market Cafe on ET Now. Now let's get you cues from the Asian market. Asian market are trading higher. Most of the markets which are opened today, especially after the gains we've seen in all the Wall Street, especially the cues to come will be tracked in from the cues to come in from Japan market. There was a lot of economic data and market has digested that. It has opened with a positive bias, flat to positive, however. Nikkei, the broader index topic is also trading with a positive bias, minor gains coming on that front also. Now, there were 3 key economic data to which traders have to react today. First was the CPI data, the Tokyo's consumer price index, which has come in higher on Y-on-Y basis. It has come in at 2.5% versus 2.4%. This is on year-on-year basis, whereas it's on a sequential basis also, it's a jump. Though their unemployment rate data for December, that one has fell to 2.4% from 2.5% from this is a reading from the earlier month. But at the same time, the retail sales data is also showing strength. That has climbed 3.7% on Y-on-Y basis. In fact, their industrial output figures also grew for the month of December. So a lot of economic data to which Nikkei could see a volatile session today. However, it looks like traders are digesting these key economic figures, and the index is behaving with a positive biasness today. At the same time, broader index is also in green at the moment. ASX, we look because still many markets are closed, are shut for the new year there. Asia, Australian market, ASX 200, that one is trading with the gains of 1/6%. And then 0.6%, 0.6% is the gain what we see on ASX. At the same time, if you track South Korean market, Kospi, that also started the day on a higher note with the gains of nearly 1%. But at the same time, we still have to wait for the cues for the Chinese as well as the Hong Kong market to come back. A long holiday they got, Shreyansi.
Well, absolutely. Let's wait by for those cues coming in. But on that note, let's take a look at the power pack lineup that we have for you then on the market at 9 a.m. We've been in conversation with Ved Goyal, who's the Group CFO and CEO at Dr. Lal PathLabs, to decode their earnings and to also get a sense of Dalal Street's budget wish list. Then Dinshaw Irani, CEO at Helios Mutual Fund, will also be chatting with us at 9:20. At 9:30, then a conversation's lined up with the management of Shree Cement to decode their earnings, and at 9:50, MD and CEO of Coromandel International is going to be talking earnings with us as well, keeping it going with earnings at 10 a.m. also. Sanjay Swarup, who's the CMD at Container Corporation of India, will also be chatting to us about their earnings, followed by a conversation at 10:15 with the Managing Director and CEO of Bank of Baroda to talk about their earnings. And lastly, Strides Pharma Science, the Management Executive Chairperson, in fact, is going to be talking to us about their earnings at 10:45. So keep an eye on that power pack lineup that we have for you on the market.
It's a power pack action lineup we have for you, but then let's keep a pace with the news that is flowing in. The biggest news right now is the union budget. And as we count down to the union budget, the focus again is on the how simplified tax structure we could get so that it aids the compliance as well as it gives an ease of doing business for the corporates. Let's hear out what Tarun Arora, who's a partner with Deloitte India, has to say on the transfer pricing law.
The transfer pricing law was introduced in India more than 2 decades ago, and since then there have been various changes that have been made to law on an ongoing basis to align with global standards and best practices. However, transfer pricing still remains as one of the most complex areas in the tax laws, And there are certain areas which still require changes, and primarily to achieve ease of doing business in India and also to get tax certainty in India. Broadly, the areas of changes which are required to law can be categorized into two parts. One is for reducing litigation in India for transfer pricing disputes, and the second is simplification of the law. So if we talk about the first one, which is reducing the litigation in India, uh, there are 2-3 measures which should be taken by the government from a transfer pricing point of view. The first one is streamlining the safe harbor rules. Now, the safe harbor rules have been in the law for a while, but because of their restricted coverage as well as the high margins which are prescribed in the safe harbor rules, majority of the taxpayers have not opted for this regime. So what needs to be done is that the rules need to be revamped and streamlined to make sure that, one, the coverage is enhanced so that more and more taxpayers can opt for the safe harbor rules, and second, the margins need to be rationalized to be in line with the industry or comparable benchmarks. So these two things will lead to more usage of the safe harbor rules, and this would also reduce the pressure on the APA scheme, which has a big backlog right now. So that's the first change which is required. The second one is on the APA scheme, and there are certain changes which are required in the APA program. First one is to ensure speedier resolution of APAs, and that can be done by way of following certain quantitative or financial matrices or framework to resolve routine cases. And for high value or complex cases, there could be larger teams of senior officials who work on expediting and closing the APA.
All right, then, as we slip into a very short break.
Welcome back. You tune into Market Cafe on ET Now. This is Priyanka along with Ms. Shriyansi. Moving on, let's get you some key earnings also which were reported yesterday. PB Fintech's profit surged as much as 92% to come in at 71.5 crore on a year-on-year basis. Revenue also grew about 49% and came in at 1292 crore. The total insurance premium grew 44% and the company's lending disbursals also saw a growth of 52% in the same period.
All right, then let's get you some more news and updates. Then IRDAI has reviewed health insurance premiums focusing on senior citizens. Then premium hikes for senior citizens, in fact, have been capped at 10% per year. And they've also said that consultation is going to be required when it comes to hikes above 10%. In fact, we have Anurag Shah who's standing by with some more detail on this. Anurag, tell us a little more about this then.
There were complaints from all quarters about the steep rise in premiums for senior citizens. So in this regard only, insurance regulator IRD has taken a big decision about capping up of increase in insurance premium yearly. So insurance companies, general insurance companies and standalone health insurance companies cannot increase premium for senior citizen health insurance policy more than 10% per annum. And if there is any increase as per the experience of insurance companies, then that can happen only after the approval of insurance regulator IRDA, and insurance companies cannot discontinue any product which were offered to senior citizens without approval of regulator IRDA. So there will be a cap for increase in premium for senior citizens, and that cap would be 10%. So senior citizen will not face increase in premium every year more than 10%. And in any case, if claim experience of insurance company is different, then regulator approval will be required. So it's a big relief for insurance policy holders, especially senior citizens, where IRD has capped the upper limit for increase in premium every year. We have seen that last year in 2024 there was a master circular which has mandated the reduction in a waiting period for pre-existing disease. The moratorium period was also reduced from 8 years to 5 years, and set timeline was fixed for a claim settlement, for cashless claim settlement. So these were the various measures taken by insurance regulator, and in this regard only relief has been given to senior citizens who were facing difficulties due to steep hike of health insurance premium.
All right, thanks very much, Anurag. Seems a big relief coming in for the senior citizen. Moving on to another key news. India is making a bold leap into AI. India has plans to develop its own world-class foundational generative AI models. This is what IT Minister Ashwini Vaishnav has to say. He announced it yesterday. The government has secured over 18,000 GPUs under the India AI Compute Facility, including 15,000 high-end GPUs. Now, the plan is to also make the model the most affordable AI compute setup at under $1 per unit, of course. But when is this expected? Well, within 4 to 8 months. With proposals invited from 6 major developers, India's AI model will be tailored for India and will provide for bias mitigation. Minister Vaishnav also revealed plans for indigenous GPUs development with discussions underway with tech partners. India's AI roadmap includes an AI safety institution and large-scale compute infrastructure, positioning the country as a serious player in the global AI race. Let's go across and listen to that excerpt.
The innovations which are happening in AI world are humongous. Really amazing innovations that are happening. And our country, India, definitely will play a major role in it. Definitely we will, because we have very strong software capabilities, we have very strong innovative innovation ecosystem. So our country will definitely play a major role in it. Yes, AI models will, and the entire ecosystem will become very distributed, that's for sure. What will be important in the way forward is how we use AI. What's the best applications that we can create? That will become really, really important in the coming days. We believe that there are at least 6 major developers who will be able to create foundational models in the next 8 to 10 months on the outer limit and 4 to 6 months on a more aggressive estimate, more optimistic estimate. What the world has seen today is that algorithmic efficiency matters a lot. Algorithmic efficiency can deliver a model at much lower cost and in a much lesser time that the world has seen today. And many of our researchers have been working on similar concepts that we are confident that using those concepts, we will be able to have a world-class foundational model in the coming few months.
Alright, then there you have it. That's what Ashwini Vaishnav then had to say about the AI race, and AI really has been the talk of the town, Priyanka. But on that note, let's take a very quick break. More news and updates on the other side.
Welcome back. Now let's get you the fine print on L&T earning, which was exceeding expectation in terms of the order inflow that came in. Revenue did meet the target. There were some parameters which were not met as per the street's expectation. Revenue rose by 17% to 64,000 crore rupee. PAT was jumped, but margin has narrowed to 9.7%. In fact, let's go to Ria to do the number crunching for us, and even what is the view that brokerages have to say on L&T now. Ria, over to you.
Well, yes, let's take a look at how the numbers have panned out for L&T in Q3 of this year. Now, as you said, the revenue has gone up 17%, which was in line with what we were expecting. But there has been a miss on the profitability front. EBITDA is up around 8.5%, but we were expecting around an 18% increase. Even on the net profit front and the margin front as well, we've seen a miss on the estimates. We were expecting the EBITDA margins to come in at 10.4%, but there has been a decline of 77 basis points. The margins are now at 9.7% in this quarter. So overall, the profitability has been below estimates. Now, in terms of the order inflows, though, those have been very strong. The order inflow has crossed 1 lakh crores for the first time, and it is at 1.16 lakh crores, which is up 53% on a year-on-year basis. And ordering has been seen across multiple geographies and sectors as well. Even the international orders this time comprised around 53% of the total order inflow, and the order book is also very healthy at 5.6 lakh crores in this quarter. As of December December 31st. If you look at the infra project segment as well, the order inflow has gone up around 14% on a year-on-year basis, and the infra segment margins have remained flat at 5.5% in this quarter. The management commentary, though, has been quite positive. They have maintained their guidance for revenue. They've maintained their 15% revenue growth for FY25 guidance. They've also maintained guidance for stable margins and their order inflow guidance of 10% year-on-year growth. So positive commentary coming in there. Now, on the back of this, Nuvama has also come out with a note on L&T. They've maintained their buy rating with a target price of rupees 4,000, saying that the buoyant order inflows and core operating margins are intact during quarter 3, and they do have a positive outlook going ahead. Although they have said that a margin uptick may still be some time away. So that is the lowdown on how L&T has performed in this quarter.
Well, absolutely. Thanks, Riya, for getting us that update then. So the order inflow has surpassed 1 lakh crore rupees. Other than that, the management commentary is quite positive and even brokerages are remaining bullish. But that's about L&T. Tell us a little more about the stocks that you're keeping on your radar bright and early this morning then.
Well, yes, let's also take a look at the stocks that are going to be in focus today. A lot of stocks have come out with their quarter 3 numbers. First up is Ajanta Pharma. The revenue has gone up just about 4% on a year-on-year basis, and the net profit has seen an increase of 11%. The EBITDA though is up just marginally up around 2% on a year-on-year basis, but the margins have declined by around 43 basis points over the previous year. There's also Aavas Financiers. The net interest income has come in at rupees 253 crores, going up almost 15% over the previous year, and the net profit has also increased by around 26% on a year-on-year basis. There's also Praj Industries reporting its quarter 3 numbers. Revenue is up just about 3% on a year-on-year basis, but the net profit has seen a very steep decline of almost 42% over the previous year. Even the EBITDA is down around 25%, and the margins have seen a decline of around 326 basis points, a very steep cut coming in on the margin front as well. If you look at Astral, the revenue has gone up around 2%, but the net profit is almost flat, up just about 0.5% on a year-on-year basis. EBITDA is up around 7%, and the margins have come in at 15.7% in this quarter. Also taking a look at Biocon, which has reported its quarter 3 numbers, the operating revenue is up around 10% on a year-on-year basis, and the EBITDA has seen an increase of around 16%. Now, further on Biocon, the board has also approved the purchase of equity shares of Biocon Biologics Limited, which is a material subsidiary of the company, from one of its existing investors. And this would result in an increase in the company's equity shareholding in Biocon Biologics by 1.5%, and the cost of acquisition is rupees 555 crores. Lastly, also keep your eye out on Wipro, since the company has won $1 million deal by Etihad Airways for IT transformation and cost optimization. So keep your eye out on all of these stocks.
Okay, a mixed bag. Some of them with positives and some of them could see a pressure into trade today. Thanks very much, Riya, for all that update on the earnings. Moving on, let's get you even a quick review on Tata Consumer. Tata Consumer's quarter 3 earnings came in largely below estimates, with tea prices hiking affecting the margins. Snehi is here with more details on that. Snehi.
Well, absolutely. Let's take a look at Tata Consumer's quarter 3 numbers, and overall it's a miss coming in versus our expectations. Revenue is largely in line with what we were expecting at 4,444 crores, which is an uptick of almost 17%, 16.8% on a year-on-year basis to be exact. So that is in line with our expectations. However, it's a miss coming in on your EBITDA PAT as well as EBITDA margins as well, because calculated EBITDA has come in at roughly 565 crores, which is a downtick of 1.3%. Net profit has come in at 279 crores, which is flat if you take a look at that on a year-on-year basis. Calculated EBITDA margins are also at 12.7% compared to 15%, so it's a big drop coming in and a miss versus what we were expecting here at ET now. If you take a look at the segmental performance, first up, let's understand what the India business has done. India business is up 23%, out of which 10% is organic, so at least that is looking good right now. EBITDA margin was impacted by the tea cost inflation. India beverages grew 16%, out of which 9% was organic. India packaged beverages grew 10%, with volumes growing 7%. This is something that is looking very healthy for the company. If you also take a look at what their tea business has done, the volumes have been very strong, and they have also been stronger than the nearest competitor, which is HUL. So that is also looking very good for the tea business. Now, tea volumes have grown 7%, like I mentioned. There was a calibrated price increase that was undertaken across the portfolio for tea. India food revenue also grew 31%, out of which 11% was organic. And salt, if you talk about this segment has also done very well because it saw a 7% value growth and 1% volume growth. They've also strengthened their market share by 110 bips further. Tata Sampann has also continued its strong performance with 23% growth. If you take a look at some other highlights, then Starbucks has opened 16 new stores during the quarter. And for the international business, they've recorded 8% revenue growth, 4% in terms of constant currency, and profitability has also improved across the board for the international businesses, roughly 35% higher on a year-on-year takeaway. The management held its con call yesterday, and here are some key highlights from it. They expect Q4 to have good acceleration. They believe that Q3 was the peak of margin pressure, and this could improve going ahead. They've also said that they have only passed on 40% of the input cost hike that they have seen, and they still have 60% more to pass. Out of this, Goldman Sachs is maintaining a neutral with a target price of 1,040 rupees per estimate, and they also believe that Q3 FY25 is largely below their estimates as well. So that's the lowdown on Tata Consumer Q3. Overall, a miss coming in versus our expectations.
Alright, thanks Nehi for getting us that update on both what the management then had to say and the earnings fine print. But let's keep it going with earnings then, because you do have banking major IndusInd Bank that is all set to come out with its third quarter earnings, likely to remain in focus. Now the street is expecting a weak set coming in for this particular banking counter, but Gaurav is standing by to tell us what exactly the street is then penciling in.
Well, yes, IndusInd Bank is definitely going to be in focus because when we look at pre-quarterly updates, we have already seen some kind of weakness. Advances grew at a range of around 12%, which was actually weakest at least in the last 10 quarters, while deposits degrew on a sequential basis. And on back of this, now brokerages are expecting flat growth in net interest income, and the reason being that high-yielding products like MFI and credit card are likely to slow down. Other than that, as an impact, net interest margins may decline almost by 10 basis points on a sequential basis as per brokerages. And on back of this, when we talk about PPOP, there are two factors which may impact this cost as well. First is cost to income ratio, and second is the fee income, which may remain flat, and as a result PPOP can decline at a rate of around 14 to 15% on a year-on-year basis. On the back of this, when we talk about provisions, we've already seen that bank created contingent provisions of around 500 crore rupees in the last quarter, and even in this quarter provisions are likely to stay elevated, and as a result credit cost is also likely to stay in the range of around 2%, and that is the reason why when we look at profitability, now brokerages are expecting profitability to decline almost by 40 to 45% on a year-on-year basis for the bank. Other than that, let's not forget that there were two major events which happened. First is bank's CFO resigned, and second is that bank sold its MFI portfolio worth more than 1500 crore rupees to asset restructuring company, which contributes around 5% of their total MFI exposure. And on back of this, we will be definitely watching out on how the commentary comes out, how management is confident about the MFI exposure and their asset quality, and also on the back of cost of funds, how their commentary is going to be something which is crucial to watch out for. But all in all, when we talk about numbers, we are expecting some kind of weakness from IndusInd Bank in this quarter.
Thanks very much, Gaurav. Looks like could be possibly a lot could be in the price, the way they have already kept the provisioning as well as some part of MFI they've already sold. Thanks very much, Gaurav, for that brief on IndusInd, what to expect from. With this, it's a wrap. So looks like we could be in for a positive start. Gift Nifty indicates a positive start. But don't go anywhere. It's a wrap on Market Cafe, but all the action stays with ET Now.
If you like this video, then like, share and subscribe to ET Now.